Hi, in today's video I'm going to show you some chart patterns you can actually make use of in technical analysis. But remember that you can also download these chart patterns and you can print it out if you'd like. So the link to these patterns will be in the description. So let's get started with the chart patterns that can actually help you in the forex market. Okay, so we're going to begin with the bullish patterns, then we'll go with the bearish ones. And our first pattern is the flag pattern. So this is how the flag pattern looks like. So the flag patterns are commonly found in patterns in the price charts of financially traded assets. So these patterns are characterized by a clear direction of the price trend. Okay, so you can clearly see that the price was going up, then they are followed by a consolidation. So a consolidation is this one over here where there's a stop, okay, and a range bound movement, which is then followed by a resumption of the trend, and then now price continues. That's the resumption of the trend. So with this chart pattern, okay, you buy when price breaks out of this, okay, line which is just above, and that is where I enter a trade. Okay, so before we move on to the other chart pattern, let me just show you how this flag pattern looks like in the real market. So I'm not going to open my MetaTrader and start looking for a flag pattern. So what I'm going to do is that I'm simply going to go on Google and search for flag pattern chart. Okay, and we're going to see a lot of charts about this. So simply go to the images and you can clearly see a good example is actually this one over here. So let me try to zoom in. Okay, unfortunately this image is very small. Don't know if you are able to see it clearly. Okay, let me do this. So as you can see, price was actually going up and there's a consolidation, and finally price broke out. Then you enter a buy at this point, and that's it. Okay, so let's go back to the other chart type. Okay, so the other chart pattern is actually called the pennant, and this is how it looks like. It is very much similar to the flag, but if you take a very good close look at it, you're going to notice that there's a difference between the flag and the pennant. Okay, so for this one, so the flag and the pennant are always similar, so you'll only be able to know if this one is a flag or a pennant based on how you draw these two lines. So they all mean the same. Okay, so let's go back to the other one, and the third chart pattern is actually the cap with candle. This one is actually the more common, and it's rarely to see this pattern on the chart, but yeah, it can able to see it, and it's actually hard to draw this pattern. Okay, and so what is the cup and handle? So the cup and handle, as the name says, it looks like a cup. From here to this point, it looks like a cup, and from here to here, it looks like a handle. So what you do is you draw this line smoothly, then from here you draw more like a handle. So where the handle begins, you draw a line below, and you also draw a line above. Then when price breaks out of this line above, you buy. So this is the cup with handle pattern, and the other pattern is actually the ascending triangle. Okay, I've talked about triangle, symmetric, and stuff like that in the past videos. So for this one, like in an uptrend, okay, first of all, let me try to define what is an ascending triangle. So the ascending triangle is generally considered to be a continuation pattern, meaning that the pattern is significant if it occurs within an uptrend or a downtrend, but in this case, this is an uptrend. Okay, so what you do here is that you draw a very straight line, which is an horizontal one, and you draw a line below the chart, which should hit at least most of the candlesticks. Okay, then after that, all you do is you simply wait for price to break out, and then you press your buy. So let me show you some ascending triangles in the real markets, how they look like. So we're going to go over to Google again and simply type in ascending. So here's the best example of an ascending chart. So as you can see, you draw line here which is below, another line over here, wait for price to break out, then now you enter a buy, and this is how it actually looks like in the real market. So let's go over to the other chart pattern. So the other chart type is actually the symmetrical triangle. It's similar to the ascending triangle, but for this one, as the name says, okay, the symmetric triangle looks almost exactly the same, okay, like in terms of slanting, it's just the same, okay. So as you can see, its force is okay. So this line which is below is actually going up, and the line which is above also is coming down, and eventually both of these lines meet, okay. And once that happens, you simply wait for price to break out, then you enter a buy. So this one is self-explained, and this one is actually easy to draw on the chart, okay. Then for measured move up, I am sure you've never seen this one, and this one really looks hard to actually draw, okay. So for this one, I will not talk about it because this one can actually mislead you, but for now we're going to skip it, and I'm going to go over with ascending scallop. This one looks like for the cup and handle, okay, pattern, it looks alike. But for this one, okay, all you need to do is drawing this smooth line, draw another line on top, another line on below, and wait for price to break out. So let's check it out on how it looks like in the real market. So here is the best example of the ascent for the scallop. So you draw a smooth curved line, okay, coming down the candlesticks, and finally going up. Then you draw another line here on top, wait for the line, okay, wait for the candlesticks to break out, then you enter a buy. So it's much simpler, but it's not easy to draw, okay. So the other chart pattern is actually the rising valleys. This one is simpler, okay. It's more like an uptrend confirmation. We have to simply have to do the higher highs, higher lows, okay, and simply write two lines, one on top and the other one below, and simply wait for price to break out, then you enter a trade, okay. But this one, for you to enter a trade, you still have to wait for additional confirmations, because you can't just rely on that alone, okay. Luckily, I've got more videos on that, also how you can actually prevent fake breakouts and stuff like that. So let's continue to other chart patterns. So this one is the flag, but for the sale. So I've already explained about this flag when you're actually buying. So simply apply that information even here on the flag, on the pennant, but for the downtrend, it's just the same thing I talked about. The inverted cap with handle, this one is actually opposite from that other one, okay. Simply draw another line over here, and once price breaks out, you see. So it's very much similar. And the descending, this one is actually for the downtrend. So everything I've talked about still applies here, and this one over here, it's similar to what I've talked about. And the descending scallop, this one actually now have to draw the curved line from the top, not below, and now you have to draw the line just below the candlesticks. Once that breaks out, you enter a sale, okay. And finally the sale one for the measured move down, and then the symmetrical triangle. So now let's go on for the reversal chart patterns. So the reversal chart pattern, the first one is this one over here, which is called the double bottoms. There's also called something called the double tops, okay, and it actually forms something more like a W, okay. So what you do is draw a line here touching both these double bottoms, okay, and draw another line on top, wait for price to break out, you enter a buy. And the other one is called a diamond bottoms. I'm sure you've never heard of this one. This is simply where you draw a box which looks like a diamond, okay, and as you can see, it's covering most of these candlesticks. So simply wait for price to break out and enter a trade. So I've never tried out this one, but it looks as if it's something worth trying to draw, and simply wait for that to happen. And finally, rectangle tops, okay. So rectangle tops are very much common, okay. I'm sure you've seen people where they actually even draw another line here, and the more like draw more like box, okay, like where all the candlesticks are just in a box and simply wait for the candlesticks to break out of the box and then they enter a trade based on the price direction. So you can definitely give it a try. And the other one is the head and shoulder. So the head has to be higher than the shoulders. That's what it's called, the head and shoulders. So this one, the shoulder should be low and this shoulder should be low or on the same, but the head should always be on top. Then finally draw a line just below the shoulder, head and shoulder, and wait for price to break out, and then you sell. Okay, and finally the head and shoulder bottom, this one is actually where you actually draw the line on top, then you wait for price to break out and then you buy. Okay, so this one is the rectangle bottoms. I've already talked about this. Okay, and the diamond bottoms, double tops, I've explained more about this. So this is it about these chart types. So if you learned something from this, give it a like. So I'll include a link in the description where you can actually download this PDF and print it out and stick it in your room so that you can get to look at it every time and finally be able to master all these chart types, and you'll be able to know these chart types even without having to draw them on the chart. Okay, so remember to give this video a like, subscribe for more. Bye for now. This is Keith Renz.